Good morning, traders. I apologize for the delay in getting started. A quick sound check, please. Today, what could go wrong getting into the office here in Chicago did go wrong. Thanks for joining me. This is episode number 2605. It is 8:10 a.m. Chicago time on Wednesday, the 17th of January, 2024. Again, thanks for being here and thanks for being patient. I want to remind you that derivatives trading carries substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for the feedback. A little screamy. Okay. This should be better. Messed around with the mic yesterday, and so now it's off. Booming. All right. So let's get to it. We don't have very much time. Here's what we've got for the pre-market summary sheet, risk-off sentiment overall this morning. We're seeing crude fall off, which I talked about yesterday. We're seeing the Russell just really weak. It's been weak for days now relative to the other indices. Europe took a bit of a hit as well. So pretty deep risk off. Not too much on the news other than, the Senate passed this stopgap budget that would avert the government shutdown for this Saturday. Just an idiotic way to run the government. It's kind of like asking for credit on a credit card so you can pay some critical bills every month. So the Chinese numbers, a lot of Chinese numbers came out last night. A lot of misses. Housing prices were worse. Industrial output was better. Retail sales was worse. GDP year on year was worse. The UK came out with its CPI and core inflation numbers, which were hotter than expected, reflecting the US numbers from a couple weeks ago. ECB's Lagarde came out and said inflation isn't where the ECB needs it to be. It plans to remain restrictive. However, she also says the ECB is likely to cut rates by summer, which is kind of speaking from both sides of the mouth there. U.S. retail sales came out a half hour ago or so, and they came in better at 0.6% versus 0.4%. Export prices were worse at negative 0.9% versus negative 0.6%. We do have Fed's bar currently speaking, as well as Fed's Bowman. We have Fed's Woods coming out at in about 2 minutes. These guys have been moving the markets around. We have industrial production as well. Business inventories a half hour after the open, and then NAHB housing market index as well. ECB's Lagarde speaks again at 10:15, so you can see there's just a central bank parade today. And then Fed's Williams, this one you want to pay attention to at 3 p.m., an hour before the cash close. That's what's on deck for today. Those are the main plays. The auction in the ES is B-shaped currently. We're in a long liquidation mode this morning. 298,000 contracts have traded. This is heavier than one standard deviation of volume at this point of the day for the last 252 days. So this is an outstanding amount of volume, an unusual amount of volume, so to speak, as it stands outside of 1 sigma. According to our stats, the inventory is 95% short, pretty strong lean to the sell side, and range is pretty good at 36 points. 36 points is right on the edge of the overnight stats that we have. It's right here. 36 points is on the edge of what we call normal or one standard deviation. So that's that. Again, crude taking a hit here. So let's take a look at what was expected yesterday versus what we got. Quick review. Yesterday, here's the outline and the lay of the land As we get into our review segment, change colors. Come on now. F. Doop. Okay. So yesterday, key numbers that we talked about. 05. 05 comes from here and here and here. So 05 was the initial test we were looking for. Okay. If the primary scenario was if we take out the 05 and that acts as a base, that now acts like a base, we're looking for right here 1516. So numbers to remember: 05, 1516 to the upside. If we're unable to hold the 05, then we're looking for the overnight low at 85 and a quarter and potentially a push below that to the 72.75. That's scenario 2. Scenario 1, test the 05, push through, hold the 05, push to 1516. That's as far as the plan goes. Whatever happens from there is great. If, of course, it continues and it starts to squeeze the 25.50, then we're holding for 39.75, right? We talked about that at length yesterday. And if 05 fails and expecting it to turn around, the overnight stat at 85 and a quarter and 72. Here's what it actually did. There's your S&P. There's your S&P. We opened up yesterday at 48.02. The 05 was tested very quickly on the open right there. It could not hold, and we had a push down. So I read this drop as an impulse down and rejection of 05 very quickly after the open. And so there was a short that set up right here at 93.50. It gave us another stab on a retest as it pulled back. Actually, the short was right there, gave us a retest right there. And I was looking for 85 and a quarter. 85 and a quarter done. So the initial portion of that scenario 2 was complete. However, it turned around and pushed right back into the full session VWAP, held on a retest down, and then broke through. That trade was done. Balance stopped out, and it formed the IB. So now what we've done is we've pushed through the 05. So the reason I showed you the scene from yesterday's video versus the detail I'm going through now is to explain to you that coming up with these plans and planning these scenarios is what keeps us in a trade and keeps us in line with what the market is doing. The market is constantly testing and retesting and testing and retesting and testing and retesting. That's its job. Its job is not to run your stops. That's just a consequence of what it does. But what happens here is we get the strong impulse up, right? So now we're back to scenario 1 potentially. Pulls right back to the 05 area, and then we have a continuation trade. And where does it go? It goes to a high of day of 15, right? This triple top right here is 15 and a quarter. So now we have almost the gap to settle trade. Couldn't quite tag the 16 to touch the prior settlement, Friday settlement. But we had the break higher on the 05, pull back to the 05, push to 15. From there, surprisingly, it pulled right back to the mid of the session through the open to the day generated prices, DGPs, in the middle of the session, and then consolidated in the middle of the session. Retest of the high again. At this point, I've lost interest because I don't anticipate that it would come back into the middle, although we are in balance. Overall, we are in balance. There were comments from Feds Williams that impacted this, and then now we're getting chopped. So we get a lower high back to the middle, and the expectation is it's very likely to sit and finish in the middle. Those of you who attended yesterday's Conversion Trading Trade Talk, that's what we talked about. We talked about, hey, when the market rejects lows, you have a push and about a 73% historical probability that this IB is done once this IB is broken, right? The neutral probability is relatively low. And the expectation is if it comes back to the middle, then it's likely to finish in the middle. Well, we went neutral yesterday. We finished in the middle. The market's completely imbalanced. This morning, so that brings us to this morning. This morning, we open immediately fall off. And what we have this morning is basically a B-shaped profile. You can see the letter B here. B-shaped profiles. This is exactly what a B-shaped profile should look like. The open should be on the stem, and then the market moves low enough to find balance at the low end of the range. So what prices have done is they've been offered until they started to get bids. And the bids stopped the auction from moving lower, and now we've got bids and offers, and the trade takes place in the fat part of the B, and then we end up holding sideways at the low end of the range. This is, again, representing long liquidation. Weaker longs come off first, and then the expectation is it's very likely to extend lower so that this profile becomes more Gaussian, right? More distributed. This is the expectation. What's more important is the fact that we couldn't take out this 15 area and hold it. So the idea is, coming in from below yesterday, the expectation is we push back into the range, go to the 15, which is the point of control of the area. This is the most accepted price in the area, and we're either chopping at the 15 and holding sideways, or we go to the 15, squeeze, consolidate, bounce, break higher, pull back, go to the 25.50, and then the next thing you know, we're at 38.50, which is last Friday's high, and then 39.75, which is the high of last year, on our way to 38.50. What it did is it pushed to 15 and completely stalled out, tried the 15 again, and it fell off. The next price down that is key, if it takes out the 15 and is unable, is what? For those of you who attended yesterday's trade talk, what is the price to the downside that is important in this area that we highlighted yesterday? I can't wait for your answer, unfortunately. If you're at the trade talk, you heard 65, 66. And where are we now? 65. The low of the overnight session is 64.75. 64.75, and that's where we are. So where do we come up with these levels? Big picture, folks. Even though we're day trading, we're looking at the big picture. And the idea here is, you can see this box that I have here is at 65, 66. You have it there, you have it there. This is kind of the area that we kept seeing a lot of order flow in. We have it there, and this is where we are now. We've taken out yesterday's targeted low in the overnight session. The next area is 65, 66. And if we exceed the 65, 66, we get right back to this lower distribution, and the controlling price in that lower distribution is at 55, 56. 55, 56. So if we don't hold and bounce off of here and back up towards 4,800, more like 47.94 or so, and kind of hold steady there, then we are looking at 55, 56. And now we're exploring the lower distribution. We're exploring where we were at the beginning of the month. So we're returning to basically where we were at the very beginning of the month. And you can see, so the left side of these profiles is a volume profile. The right side of these profiles is a market profile. Volume profiles are volume at every price on a tick granularity. Very accurate, but it's noisy. Market profile organizes information in half-hour brackets and sees how long each price had half-hour brackets, and it gives us these profiles. Like you look at yesterday's pretty fat, pretty active price discovery, pretty wide range of acceptance yesterday. That's what we saw. You know, came down, went up, came down again, made neutral, came up again, and kind of held the middle. And what this is saying is there's no consensus here. We don't have a profile that looks like this. This is consensus. This is not. Okay? And so pretty active price discovery is expected to continue into today's session. We're opening in a gap. Any attempt higher this morning from here can hold because it's already tested the 65.66. We'd want to see that in a day. But very early on, we're likely to try to squeeze, and it's going to be a very important line in the sand right here at 65.66. So we're going to watch carefully to see what it does with the 65.66. Is it going to fall into this lower auction, or is it going to come back up to this higher auction? So let's draw a quick volume profile for the upper auction right here. We don't want to include the breakout day, right? So let's look at where we are. Pull on the tick data, there it is. So that's your 15. It's actually 13 in volume profile, 15 in market profile. But this zone that we failed from yesterday, right here, that's the upper distribution that was rejected yesterday. And now 55.56 gets a chance to shine if we break through. So to this morning, I'd want to see it open, fall through, unable to get back above. That sets up a short, targeting 55.56, consolidate. Does a 55.56 bring in buyers because it's cheap and it comes back up? Not likely. Or does it consolidate for a while and then later in the session it starts to give it up and it continues to fall? So yesterday I said if it doesn't hold this 15, it's very likely to test the lower 4700s. This is what's happening today. There's no magic to this. I'm not right all the time and all that stuff. I'm not trying to convince you that I know what I'm talking about. I'm just simply following the auction, and this is the best way to trade. Okay? Remember, tomorrow at 1 p.m. Eastern, I'm going to be talking about preparation. I'm going to go over a lot of this stuff. That's a webinar that's occurring at 1 p.m. Eastern. The link for it is pinned to your live chat. You can find it by pointing your browser to the number 2, ct.pro/preparation. We'll talk about how this whole mechanism works, and hopefully you can incorporate it into whatever you're doing and be more confident when you're in trades. Good luck. The market's about to open. Take care.